What's up, guys? Welcome back. Second YouTube video of my young career. This time we're going to be talking about how I knew on Wednesday that the market would bottom on Friday, and how I saw that and how I was able to determine that. So obviously, bull market. Clearly, I mean, you look at the monthly. Always start on the monthly. Uh, then you go down, and the key is you just wait for these big dips, the huge dips where everything just tanks and gets obliterated, and VIX goes nuclear as well. And then once that happens, then you can start getting ready for the bottom. So Wednesday we had that with the FOMC, and everything just cratered. And at that point, I mean, that'd be a good spot for like long term shares and all that stuff. But for options, it's best for options. You want to try to get you don't want to have any drawdown. So if you can identify something will go lower and you can get a better entry, then that's obviously ideal. So we go down to the daily here, and what I saw was, yeah, it tanked pretty hard, and it never really took out this low from November 19th. So usually after a big dump like that, that won't be the bottom initially. Sometimes it will, or at least there will be another fake out right after. So we did that. We didn't take out the low. And so what I was looking for Thursday, I kind of didn't really want to get into anything because I figured it'd be kind of choppy after that huge day. But Friday, it came down. I was looking for it to go down below here, November 19th, and into this fair value gap down here from the election. And that's what it did. It did that in pre-market and shot right back up into market open. And so right then and there, it's just gives you the confidence you can have a set risk there. So that should be the bottom. So right when the market opens, what I like to do is first dip I see, I'll just buy it. Usually go like a couple months out, and then you can just ride the wave up for the next all-time high that it's going to make. We got some more Tesla February calls, and we also did some just SPY February calls as well. And so you go down here, you look at we can look at the 4 hour. Just takes out both these lows, Wednesday low and November 19th low. And it really wouldn't, sometimes it won't take out the lows. Like it could have just had made a small trend right here, and then like kind of faked it down below that trend line, mini trend line here, and then it could have ripped from there. But it was perfect. It came all the way down below this liquidity in pre-market and shot right back up. So that was a really good sign. You can have the confidence to buy whatever you're looking at for calls. Pretty much it calls on any company would have worked Friday. And you can have a pretty small risk there. You buy here and you just have your risk below the low of pre-market, where things could potentially get ugly. But another great indicator that I have found over the last couple years, you put not Tesla. You put VIX put VIX next to the S&P. Throw both of them on the same time frame. And so right here, it was just obvious. It's probably my favorite indicator to get into a play. So the S&P made that low, and the same time VIX made this high, and that was on Wednesday. And the S&P ended up making a new low, and at the same time, as you can see right here, at the same time of the S&P, VIX did not get above the high from Wednesday. And so both of those right there S&P taking out the low and shooting right back up, and VIX not making a higher high as S&P made a new low. That's just one of the best strategies that I've ever had. Probably is the best. And so that just gives you the confidence right there to be able to get into the play, and then you can just ride it out. Like I like to, when great dips like this happen, I'll just go like 2 months out, and then you can ride. We'll be able to ride it all the way to new to all-time highs, and once we see something up there, you can just scale out along the way. Like I think the first target for me would be new all-time highs. Take some off above all-time highs, and then you can use some fibs for other targets. I like to just throw it on the high and then the low. So first target you can just sell once it breaks above all-time highs, take out a little liquidity there. You can shave some off, and then next target would probably be 62.93 for me on SPX. Take some more off of SPY calls, probably some Tesla calls too. And we're in ASTS as well, so a good target would be whenever it hits that. You could scale some out at ASTS. And then after this point, since we're on the 4 hour, you could probably scale out like 75% at that point, and then probably just have like a stop loss if it ended up going back below all-time highs from right here. That would be what I would do. And then you could just, with the last 20% you got, you could just keep scaling out as it went higher and higher. And then I don't really like to hold them all the way till expiration unless I got a lot of conviction that it's just gonna go dumb. So yeah, that's a good way to get targets, is liquidity, and identify bottoms, also liquidity, and using some fair value gaps. But yeah, that's what I saw. That's what I saw on Wednesday. I think the outlook for the market for this week is good. Futures are looking a little good right now, up 20 points. I think Monday should continue up. It might come down and dip into this fair value gap we made on Friday, and then continue up. For me, I'm gonna have my stop loss for the SPY and Tesla calls. If we do end up going down back below these lows, then that's not good. But I don't think that'll happen with just what happened with VIX and that divergence, or whatever you want to call it. I don't know. But yeah, targets, liquidity, just keep it simple. You don't need a million indicators on your screen. The EMAs, I mean, you don't even really need them. I just use them for like looking at the monthly and the weekly. I think they're good for that. It just kind of helps seeing the trend. Obviously, the week or the monthly on S&P is pretty easy to see the trend. But yeah, that's how I identified the bottom. Wait for a big dip, and then once it has a big dip, then just wait for another fake out. I can give another example. It happened on before the election, over here on November 4th. We'll go check that one out. We'll put that next to VIX. All right, so here we go. This 4-hour chart, S&P, was right before the election. So we had this big drop. Go find the same days on VIX. All right. Here we go. So yeah, low here. Low on SPY or S&P, high on VIX that day. Then within the next 2 days, S&P made a new low, but you see here, the VIX did not make a new high from that bad down day. So right there, you could have once it pulled back up above that low, you can just wait for a little dip into like a fair value gap, buy some month out calls, 2 month out calls with conviction with that going on. And as you see the next day, obviously people could say, oh yeah, Trump got elected, how that was just luck. But the charts literally tell you what's going to happen if you look close enough. Just straight up after that. Liquidity, you could sell a little bit, all-time highs, boom. Throw the Fibonacci on there. Boom, hit the 1618 extension. Sell out. Majority of it, 80%, 90%, however you want to do it. Leave one runner maybe if you want to. So yeah, that happened on election. Happened last week. You could go back in time and you could find hundreds of other times where that happened if you just go back and look at VIX and S&P. So yeah, that's the best indicator I use. I don't know if it's an indicator, I guess it kind of is. Best strategy that I have that just prints money. Every time I have used it, I have not lost. I'm sure there is times when it loses, but I can't remember the last time I used that and it didn't work out. But the key is just you got to wait for a huge dip and a huge VIX spike, because you can't. It's better to do it when a huge drop happens. You don't want to do it like if you see some consolidate up here and you see that, then it's kind of like your risk reward isn't that good. But when it's a big dip like that or that, or that, then you can have some big conviction and it works out every time. Almost every time. I would have to go back and look and see if it did happen where it didn't work out. But every time I've noticed it in the last like year, I'd say, it hasn't lost. So, not financial advice, but yeah, best strategy I have. Hope that helped. Hope that helps you guys make some money in the future. Just keep an eye on that, and good luck. I hope you enjoyed the video. Second video, I hope to be making a third one about Tesla here pretty soon. That one just keeps going. So, yeah, thanks for watching, guys. See you next time.